Hey everyone, it's Julie here with TipRanks, and today we're taking a look at two stocks that score a perfect 10. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two stocks in the industrial goods sector that score a 10 out of 10 on the TipRanks Smart Score. That Smart Score looks at 8 unique factors and measures a stock's likelihood to outperform the overall market. On top of that, these stocks also come in with a strong buy consensus from Wall Street analysts. So today we're going to take a look at these companies, what it is that they do, and of course what those analysts are predicting for the stock's future. We came across these companies today using the TipRanks Top Smart Score stock page. Found underneath the Ideas tab with the top Smart Score stocks, you'll find a collection of companies currently scoring a 10 out of 10 rating. I focused in on the industrial sector with a medium to large market cap to get our list down below. And just before we get into today's stocks, this is a friendly reminder that if you enjoyed the video, make sure you hit that thumbs up button and that you're subscribed to the channel. Don't forget you can also download the TipRanks mobile app to access all your favorite research tools on the go by following the links in the description down below. Now let's jump right into our strong buy perfect 10 stocks. First up, we're taking a look at Atmus Filtration Technologies. Trading under the ticker ATMU, they're currently priced at $40.73, and this is one we've touched on before, most recently back in September or August, I believe. Over the last year, the company has gained 66%, in the last 6 months is up 44%, and in the last 3, up 13.5%. They do score a 10 out of 10 on the TipRanks Smart Score, with bullish blogger sentiment, very positive crown wisdom, and increased hedge fund activity. In fact, hedge funds have increased their overall holdings by 2.7 million shares last quarter. Atmus Filtration is a global leader in filtration solutions, creating products that extend equipment life and reduce cost of ownership for their customers. Operating in more than 150 countries, they design, manufacture, and sell a wide range of filtration products under the FleetGuard brand. These include fuel filters, lube filters, air filters, crankcase ventilation systems, hydraulic filters, coolants, and fuel additives. Their products serve various industries, including on-highway commercial vehicles and off-highway, including agricultural, construction, mining, marine, and power generation. They're known for their technology leadership with over 1,300 active or pending worldwide patents and patent applications. Their Q3 earnings report came out on November 8th, where the company saw both an earnings and revenue beat. They reported Q3 earnings per share of 61 cents, beating estimates by 9 cents per share, and revenue came in at $404 million, beating by just over $600,000. And the company also raised their full-year guidance for revenue, adjusted EBITDA margin, and adjusted earnings per share. And following that strong quarterly report, we did hear from a 5-star analyst at Bank of America Securities who reiterated a buy rating. They said that despite facing challenges in end markets, the company managed to raise its guidance, which reflects confidence in future performance. An improved outlook in truckload demand, as indicated by Bank of America's survey, suggests potential growth in aftermarket revenue for Atmus. The company's management also raised their future guidance alongside a positive adjustment in earnings per share expectations, and these factors, combined with a strategic valuation approach that considers industry peer comparisons, support the robust outlook for Atmus. The Atmus stock does just have 5 current analyst ratings, but comes in as a strong buy based on 4 buys and 1 hold. The average price target of $48.60 implies an upside potential of over 19%. Looking at those ratings down below, a lot of 5-star analysts weighing in. On the low end, we do have our 1 hold rating with an upside of 10%, while our high-end price target comes from JP Morgan at $51 for an upside of over 25%. Last but not least, we're looking at Primoris Services. They trade under the ticker PRIM, currently priced at $81.63. Year to date, they've climbed a staggering 146%, gaining 51% in the last 6 months and 45% in just the last 3. They score a 10 out of 10 on the TipRanks Smart Score with increased hedge fund activity, bullish blogger sentiment, and very positive crowd wisdom. In fact, when we look at the number of portfolios that have been holding the stock, that has increased over 63% in the last 30 days. Primoris is a diversified infrastructure, construction, and engineering company. They play a vital role in building and maintaining the infrastructure that supports modern society, focusing on projects that enhance public safety, economic development, and environmental stability. Their business segments include utilities, energy and renewables, and pipeline, and some of their key activities include engineering, procurement, and construction, as well as maintenance and upgrades. They operate primarily in the US and Canada, working with utility companies, energy producers, government entities, and private industries. And we have yet another company coming out with a third quarter earnings and revenue beat. They shared theirs on November 4th, and they also announced a 33% increase to their quarterly dividend. They reported Q3 earnings per share of $1.22, beating estimates by 20 cents per share, while revenue of $1.64 billion did beat by $50 million, growing over 7% year over year. Management noted that the company had record levels of revenue, earnings, and backlog while also delivering strong operating cash flow. With that, they increased their quarterly cash dividend to 8 cents per share and also increased their future outlooks. And just last week, we had a 4-star analyst from KeyBank initiate coverage on the Primoris stock with a buy, saying that the company has potential for outsized value creation through its dominant positioning in utility-scale solar, its growing power delivery business, and the benefits from industry uptrends in the communication segment through expanding fiber capex. The firm said that shares trade at a discount to closest peers despite the 137% plus rally year to date. And with 5 current analyst ratings, the stock does come in as a strong buy with 4 buys and 1 hold. And the average price target comes in at $87.75, which would be an upside potential of 7.5% from current prices. Looking at those ratings down below, on the low end, we do have a buy rating from back at the start of November with a downside of over 5% as the stock has already surpassed that price target. Our more recent rating here from KeyBank is the high end at $96 for an upside of over 17%. So that is a quick look at 3 strong buy stocks, all scoring a 10 out of 10 on the TipRanks Smart Score. Let me know your thoughts on these companies in the comments down below and which other stocks are catching your eye lately. I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, just sharing what those Wall Street analysts are looking at, so please make sure you always do your own research and due diligence. Thank you guys so much for watching. I hope you have a wonderful day, and I'll see you back here next time.